Hello and welcome to This Week in Global Development. I'm David Ainsworth, the business editor here at Devex. I'm your host today and I'm joined by two of our reporters, Advar and Jesse, who are both at the World Bank meetings. Unlike me, I'm in my office in a small town in London, somewhere near London. So I think we're going to kick off and talk mostly about the World Bank this week. We'll move to a couple of other topics if we have time. But let's start there in Washington. So, Jesse, let's come to you first. So, how are things in Washington? There was a lot of speculation that this was going to be a slightly strange World Bank meeting, a little bit subdued, everybody trying to kind of steer clear of Donald Trump. How's it been?
Yeah, it hasn't felt a whole lot different from the meetings that I came to last in October last year. Surprisingly, it doesn't feel like that people are being super careful. There's definitely a little bit of a shift in the rhetoric that we're seeing in the agenda, but overall, it's in the background and people are noting it, but I don't think it's having a huge effect on the conversations that we're having. Adva, do you have more to say on that?
Yeah, I think in general, I would agree with that. I've heard a little bit from some people about disappointment that we're not, seeing more progress on key issues like debt. But to be honest, these people also weren't expecting us to see a lot of progress this week. So I do think there is still this tone of, around the bank meetings, around the G20, which also meets alongside these meetings, that there's not a lot moving forward in these international forums right now. Some of the processes are kind of at a standstill, and that's challenging. So the IMF can come out and say the global economic outlook is getting worse. That's what they did. Growth will decline. And they updated from January, and the prognosis is worse, largely on the back of sort of trade tensions and challenges. And I think we'll get more to that later. But I think that there are some challenges still this week. But I think overall, like Jesse said, it doesn't feel that much different. I do think, one of the big questions coming into the week was how, will the US withdraw from the World Bank and IMF? How will they continue to engage? And that was sort of casting a shadow. And it was. So I think the organizations were trying to sort of be a little bit quiet. There's still this 180-day review that was ordered in an executive order from Donald Trump. So that is ongoing. So I think there is there is, ongoing engagement with the U.S. government, but a desire to, tiptoe around things. We saw the IMF announce a major deal to Argentina. That was praised yesterday by the U.S. Treasury Secretary. That's something that I think the U.S. government wanted done, and the IMF did it. The World Bank and the Inter-American Development Bank also came in with significant, investments in Argentina as well. So I think, you're seeing some of the policy influence already, but we were seeing that before this week as well. And just to dive in a little bit further, I was at a speech that the Treasury Secretary, Scott Bessent, gave yesterday. I think he really answered that big question around U.S. engagement. And we don't know exactly what it will look like. We still have questions about funding. But he said that the IMF and the World Bank both serve critical roles in the international system, that the Trump administration is eager to work with them, but that they need to stay true to their missions, and that they're currently falling short of meeting their missions, that there has been mission creep, that they're too focused on, issues related to climate, for example, and that IMF also shouldn't focus on gender and social issues. Should really be focused on sort of global macroeconomic policy, financial stability, those things, the sort of core mission of IMF, the reason it was founded, and that at the bank, they should focus less on climate and far more on reducing poverty and economic growth. And so I think we sort of anticipated that was a possibility, but it was really interesting to hear sort of not only support from these institutions by the Treasury Secretary, but also a list of demands of what the U.S. might want to see from them in terms of reforms.
Okay. Jesse, let's come back to you there. So Advar just mentioned climate. So you've been watching what's going on with the bank and climate. They've been kind of trying to pretend desperately that they haven't just made a big kind of pivot towards climate in the last administration, and that they're not doing really any kind of climate. But what is actually happening?
AJ Bongo really moved the bank over to climate at its core. They even kind of changed the letters outside the building to be more about climate and addressing climate. And obviously, this administration has been very clear that that's not on the top of their agenda, if on the agenda at all. And so we have seen that reflected in the agenda. There's, I think, just one event that has the word climate in it. I think that there might be another one or two, but they're civil society events. And the only one that is an official World Bank event was on kind of catalyzing climate investments for growth. And so they're taking a real like economic standpoint on the value of climate at the meetings that we've seen so far. As Adva mentioned, there was a lot of fear that the bank could, or that the US could withdraw from the bank or reduce its share. And so a lot of people were thinking, okay, maybe they're going to start to change their rhetoric or remove climate in order to stay friendly with the US. The bank has said very clearly that they're not doing that, that they stay committed to their 45% of their investments going towards climate, and they're going to keep using the words climate and climate change. But at the same time, this week, the major change I've seen from last year and the years before is they're really kind of hush hush about climate. I think they're just trying to kind of stay under the radar and instead focus on jobs and lifting people out of poverty through jobs. And as Adva mentioned, that was sort of the core idea of the bank prior to AJ Banga. It was all about poverty. And so some are saying, this is a return to that fundamental purpose. And then others argue that climate is very much a part of poverty. And so you can't really do one without the other. So it's very slim pickings. We've also seen a much bigger emphasis on nuclear. Adva can talk more about that. That's a little bit more of a friendly kind of a Trump friendly way of talking about energy and renewable energy. Yeah, it's a different vibe on that front.
Let me just jump in because I did want to say that I think to me, one of the real shifts has been less talk about climate and more talk about energy. Just like Jesse just said, right? Because energy is on the agenda a lot this week. And there's a lot of talk about the Mission 300 initiative to bring, electricity to 300 million Africans by 2030. I think it's 2030, might be 2050. You have to correct me if I'm wrong, but it's a pretty ambitious initiative by the World Bank and the African Development Bank. And there's been a lot of other partners, including philanthropies, that have come in and gotten involved. One of the things we've seen is a shift in how the bank is talking about energy policy and a push at the bank to actually change its energy policy. And this is something that actually, if you look at things, Ajay Banga he actually talked to the board about nuclear energy last year before Trump was elected. This is something that he's been thinking about. And I think that's partly driven by demands from borrowing countries. They want what you talk about as baseload energy, consistent energy sources that can be the backbone of industry and create economic growth. And one of the things we do know about, a lot of the renewable sources like solar and wind is that they're intermittent because they're based on the sun and the wind. And so needing a combination of those resources. And so I think, and increasingly, we've also heard the bank talking about natural gas as a sort of bridging fuel that could be used also to create that baseload energy. I think, Ajay Banga is going to take that to the board in June. We'll see if they change the energy policy, but it does seem like there's quite a bit of momentum to do that. And there's U.S. support from it. We heard the Treasury Secretary talk about the need for the bank to embrace an all of the above energy approach. That's something that obviously Ajay Banga was talking about before. He's been talking about it more in recent months, but I do think we're seeing the bank moving in that direction. Will that create some tensions with climate? I don't know. It's a thing we've seen, right? This trade-off between climate and economic growth. I think one of the ways Banga has talked about it is that the bank really wants to do sort of these infrastructure projects in the most sort of climate smart ways, right? So are we building power plants, roads, et cetera, in ways that account for, increased temperatures, increased flood risks, things like that, right? So I think that's one sort of shift we've seen this week, but it'll be really interesting to watch how those sort of debates over the energy policy play out and if the board does give approval.
And you talked about another thing that also is obviously on the agenda this week. It's officially at the top of the agenda, is jobs, which again, I think is a more kind of Trump friendly message. And presumably part of the reason that it's top of the agenda is in order because it's kind of something that seems palatable to the United States.
Yeah, safe.
Yeah, exactly that. So how much actual progress are we seeing on jobs? It seems to be in a lot of places on the agenda, but I'm not clear really kind of what's happening, what's going on.
Yeah, and what I can tell you is that, there aren't haven't been any sort of like headline goals announced, no flashy data, and we haven't seen even sort of a clear definition from the bank yet about exactly how they're defining jobs. Now, at their flagship event this week, they did talk about, sort of jobs that can offer pathways out of poverty. There's, what exactly that means, I'm not sure. Ajay Banga said, but that really the jobs are going to be sort of the North Star for the bank. And so instead of it just being sort of a byproduct of the work it's doing around economic growth, that it really wants it to be sort of the core goal. And they are working to change practices. They brought on some additional teams to work on jobs, but we don't have sort of indicators yet. They launched a new scorecard last year to measure progress around bank goals. Jobs is one of those indicators. There's no data there yet. I, asked specifically, when do we see the indicators? When do we know how you're going to measure this? They're still working on it. They have this jobs council with outside experts, both government, business, and academic leaders. And they're sort of leaning on that council to try and develop the best methodology to measure jobs. I have talked to folks, particularly in civil society, who are like, it's kind of odd to have a meeting focused on jobs when we don't even know how the bank is sort of measuring jobs and we don't have data around it. And that it's really important that the bank is transparent about this and goes about measuring jobs in appropriate ways. But the bank is elevating it sort of across the entire group. I spoke to the senior managing director at the bank, Axel von Trossenberg, who's like the number 2 at the bank. And he said that what they're really trying to do is sort of make jobs part of the DNA of the institution. So they are, I think, doing a lot of work internally. We're just not seeing a lot of sort of external announcements, et cetera, but it's more of a, at this point, operational internal process. There is a team around like job diagnostics. They are continuing to meet with the Jobs Council that's providing ideas. The other thing that was announced this week is sort of an update of the Private Sector Investment Lab, which Ajay Banga launched with a group of private sector leaders that have come in to advise the bank on a number of ways of how to get more private capital into these markets. And so one of the things that council is going to look at more is jobs, particularly in a set of industries that are considered important for job creation. So there are some things happening, but a lot of it is sort of behind closed doors and behind the scenes.
Yeah. And I guess one thing that probably is not going to help hugely with job creation is slapping a bunch of tariffs on the poorest countries in the world. So with that in mind, I mean, this was already a huge issue, really, was kind of the economic strength of lower middle income countries. And in particular, I think what's been hanging over the bank meetings for ages and ages is this spectre of debt. When I was there last year, like they were talking about debt. Everybody was talking about debt. Everyone was saying, are we going to make any progress on debt? We have not made any progress as far as I'm aware on debt. Like, in fact, we understand, my understanding is that this tariff structure has made the debt situation significantly worse. Can you kind of talk us through where we are on these issues?
Yeah, I mean, debt has come up a lot in audience questions. It doesn't seem, it's not like a headlining topic, but I'm hearing it everywhere I look. As you mentioned, debt has gotten worse. I think the number off the top of my head is that low and middle income countries, their debt has more than doubled since 2009. So we're full on, in a debt crisis. And as you said, tariffs are not going to help. And there are two sort of general ways in which it's unhelpful: the tariffs themselves, obviously, and also the uncertainty caused by the tariffs. So as we know, there's a 90-day freeze. He announced these big tariffs on the quote unquote Liberation Day, and then there was a freeze on some of the biggest tariffs. And so not all the countries are being hit right now, but they're all freaking out, obviously, because they don't know what's going to happen. The tariffs themselves, they're obviously going to increase the cost of exports for these lower income countries. And that's going to reduce their access to foreign currency, which they need to pay back their debt. So it's kind of this really negative cycle that the tariffs are putting them in. But from the uncertainty perspective, that's just going to have a really big impact on the global economy. You're going to have people holding on to their money, putting it more in safer places, which means you're not going to have as many creditors willing to help these countries refinance their debt. So that's sort of the overarching connection between tariffs and the debt crisis and how we're going to see this get worse. And at the beginning of the tariff announcement, we saw that some of the lowest income countries, which are also tend to be the most debt distressed, were getting hit with some of the biggest tariff percentages. Like Lesotho was going to have a 50% tariff. That's its tiny country in southern Africa. Cambodia had 49% and Bangladesh had 37%. So that's huge. That's obviously going to be a problem for their economies. And so for now, like I said, we don't know exactly what's going to happen, but experts are very much saying, the reaction is already happening, even if some of the tariffs are frozen. At the meetings, I think it was yesterday, the IMF announced this playbook called they had a sovereign debt roundtable. It was closed door meeting, so I wasn't able to listen in, but they published this very simple 7-page kind of step-by-step guide on how to refinance and restructure your debt. And it doesn't really address the problem, the big problem of the debt crisis, but it is every country that has to restructure their debt for the first time doesn't know how to do that. And so now we have this really straightforward, readable guide, and experts are saying it's going to expedite the process. It's going to help these countries get what they need. And a big part of the problem is how long it takes for this to go and how many mistakes are made. And so this could have a real, impact just on the procedural part of it, which is great. But I talked to some experts, and they literally said it lacks creative thinking on kind of how to address the debt crisis. So, it's good and it's a step forward, but maybe just a very, very tiny one.
Yeah, I think for practical purposes, right, like the systems that currently exist to address debt distress aren't working well. And we're not, we haven't seen, any statement from the G20 yet. I think we expect something later today. But, people aren't expecting them to come out and say much around debt. The G20 Common Framework on Debt is sort of one of the main ways that debt is addressed right now. And we haven't actually seen a lot of progress in reforming or changing that. And it's not, every expert I talk to says it's not working as it is. And so I think, one of the things that we'll continue to cover is that there are, a lot of people who want there to be sort of a separate mechanism. A lot of people are pushing for it to be at the UN that would essentially create a bankruptcy process for debt in the way that people who go into personal debt can, file for bankruptcy. And through sort of a legal process, you sort out that debt, the creditors are all involved. People want to see something similar for sovereign debt. It's an idea that's been around for a while. We haven't seen a lot of progress on it. I think it'd be interesting to see if it comes up in the conversations around the Financing for Development Forum in Sevilla later this year. But it is something that we have sort of heard and are watching.
Yeah, I mean,
Just to add one small bit to that, I did hear from some people from the African continent who were saying, this might be an opportunity to really push forward more regional monetary funds. And so obviously they're not going to be able to shift reliance entirely over to a new fund. They're still going to need the IMF. They're still going to need the Bretton Woods institutions. But for example, the African Union's been working on developing its own African monetary fund for a while. It hasn't really moved forward. And so some people are saying this could be the kind of boost they need in order to put a little bit more effort into that. So we could see some more regional funds developing over the coming months or years.
Yeah, it's a fascinating question. I mean, we don't really have enough time to properly get into the causes of this debt crisis right now, but as I understand it, and you two know more than me, so you can correct me, but essentially what happened here was that these countries were already quite highly indebted when they were hit by COVID, which everybody had to borrow in order to get through. And then straight after that, we had a huge injection of inflation caused largely by the war in Ukraine and the increase in food prices. And this has essentially driven debt to completely unsustainable levels. And we're now back in a worse situation than we were 20 odd years ago when we had the Paris Agreement and everybody tried to restructure. And this debt is largely owed to private creditors in Wall Street and in London. And unfortunately, it looks like the chances of any kind of sensible resolution to this are very, very low, whilst we have the Trump administration there, which is fundamentally not interested really in addressing the debt issues of low and middle income countries.
Can I just weigh in on that quickly?
Yeah,
because
sure.
actually the Treasury Secretary in his remarks yesterday actually said that one of the things the IMF should focus on is on debt. and that it should more proactively push, especially low-income nations, or to push like creditor countries to work with the low-income nations who are borrowing to address debt distress. So I think that it is not necessarily true that the U.S. doesn't care about this. The U.S. does not actually provide a lot of direct sovereign debt. So while they're involved in a lot of these discussions, they are not a major creditor because they don't do a lot of lending to governments. That's not sort of the way that foreign aid has been distributed by the U.S. for the large part. And so they're less of a creditor in this, but certainly a lot of American, investors and a lot of investment that comes from Wall Street is involved in this, but also in Europe as well. A lot of these countries hold Euro bonds, have issued bonds on the European markets. And I think, one of the things we've seen is also, as their local currency value drops against the value of the dollar, it's not even that the debt is going up. It's just the cost to service that debt is going up. And then the social implications at home are really dramatic. We're seeing some countries spending more to service their debt than they're spending on health and education and critical social services domestically, right? So there's, I think IMF Director Kristalina Georgieva said this week that it will be painful. Countries are going to experience pain, but that they need to really get their sort of financial ships in order.
Yeah, fundamentally, this doesn't really seem a sustainable model. And I think it's going to continue to be a problem going round and round again. I'd love to speak about this for a lot longer, and I think probably I'm not the only person sitting here who would. And maybe we should talk more at length about debt in some future kind of podcasts, and probably write more about it as well. But there's a couple of other things happening this week outside of the World Bank that I'd love to just touch on quite quickly. So one of those, Eva, is you, I believe, got a bit of a scoop this week about MCC. So this is more bad news, unfortunately, potentially for the development sector.
Yeah. The Millennium Challenge Corporation, which for people don't know is a small U.S. aid agency, it has sort of a very unique model where it uses a scorecard that has a variety of sort of governance indicators to evaluate countries. If countries meet this scorecard, if they demonstrate sort of good governance, they can qualify for really large grants, generally focused on infrastructure. We're talking $300, $400+ million, often grants from the U.S. government to focus on critical barriers to economic growth. Those projects are typically run by locally created entities. Their relationships signed almost like a treaty with governments as they embark. And what we heard yesterday is that DOGE had instructed the agency to essentially shut down, and that staff were sort of told at meetings yesterday. There was a email that went out on Tuesday that essentially said, the foreign assistance review is ongoing, but, we understand from the DOGE team that there will soon be a significant reduction in the number of MCC's programs and agency staff. So what we've sort of seen is that there were a couple sort of buyout or early retirement offers offered to staff, but that otherwise they're expecting sort of reduction in force notices like we've seen at other agencies. But essentially what we're hearing from people, it's not completely confirmed. It appears that there would need to be some sort of board approval. Secretary of State Marco Rubio, in theory, serves as the chair of the MCC board. The Secretary of State always holds that position. I have heard that maybe he's delegated that authority. So it's sort of, there's still a lack of clarity. We were hearing a lot of rumors yesterday about some of the details. I certainly have heard from staff what they've been told, which is essentially that all compacts will be shut down. Some of these have ongoing, in the middle of operations infrastructure projects, right? So there is the potential for the abandonment of these projects, or maybe the governments can see if they can take them on. But for a lot of these countries, very low income countries, this is really critical financing. So I think, there's a lot to be determined. I spoke with the finance minister from Zambia earlier today, and I asked him about MCC, and he said, look, we don't have any official notification yet from the U.S. government, so he couldn't really comment. And he said essentially that there's no clarity, even if the MCC office would close, could the compact be transferred to a different, part of the government, which is not something that I've heard internally, but I think we're still in a phase where there's a lot of lack of clarity, but it seems, at least from what we're hearing, that the intention from DOGE is to shut down the agency, and that actually came as a surprise. That early the agency had actually been engaging with DOGE, sharing data, etc. MCC has sort of in its DNA always been a very sort of data-driven, kind of private sector oriented agency, and people, I think a lot of people thought that it would be considered a useful vehicle, also because these types of compacts, essentially the US says we're going to give you this money, but they're also making demands of the governments to make certain policy changes to be eligible for it. And if governments don't follow through, MCC has withdrawn that money, right? So it has been seen, people talk about thinking that the Trump administration will be very transactional. So it was seen as like maybe this compact model will be more appealing. It's an agency that was founded by former President George Bush. It has enjoyed a lot of, historically, at least, bipartisan support on Capitol Hill, including, as recently as December when a bill was passed to expand the number of countries it could work in. That included, on the Senate side, the bill was, co-sponsored and led by the, Republican head of the Senate Foreign Relations Committee, Senator Risch. So, I think it did come kind of as a shock to some people who thought it might be able to weather the storm. And I think people at the agency were trying to keep their head down, trying to do that. But I think it was a really sad day for people at the agency yesterday. From what I heard, there were a lot of tears in the hallways, and, a little bit of a feeling of, there's not much that can be done. I was told, I think by a couple of people, that they were told in these meetings not to expect some sort of Hail Mary.
I mean, this doesn't make a lot of sense to me, really. If we're looking at the idea that aid should make America safer, stronger, and more prosperous, this seems to tick all of those boxes really, really clearly. It's a very kind of structurally anti-China kind of set of policies.
And in the past few years, MCC has really positioned itself as a vehicle to counter China. And I think one of the examples of that is a big compact that they have that has been ongoing with Nepal. And that created a lot of actually domestic turmoil. It took a lot of years to get it finalized because China was coming in and trying to spread misinformation that this was the U.S. trying to take control in Nepal, and so there was finally this win to get it across the finish line and for that to now be canceled. And in Pacific Island nations, the Solomon Islands and Kiribati, the MCC was working on programs. And so to see that pulled back, I think it does come as a surprise because it was seen as a tool to counter China and to really focus on sort of a private sector oriented infrastructure, based model, that, was created by, a Republican president. But, I think it was a surprise to many people. I think we'll see what that means.
Yeah. And Jesse, we're seeing some of the same rumors about similar sorts of threats to philanthropic foundations in the US as well, which is really kind of going even further than people had potentially expected. So what's the latest there?
Yeah, so we had heard last week that the Trump administration might be issuing these executive orders that would really limit the operations of philanthropies by removing their tax exempt status. And the main kind of headline thing was that the philanthropies that were focused on climate would be targeted. But it really wasn't limited to target philanthropies operating overseas. It was very general, and this would have to obviously go through the IRS, which normally requires like a long auditing process for them to figure out whether or not these philanthropies had violated their tax exempt status. Obviously, an executive order would try to kind of go around that, but we haven't actually seen those come out. So these were rumors last week. A lot of people said that they would come out either yesterday or the day before yesterday. And Trump did sign some executive orders yesterday, but none of them mentioned these organizations. So we're not really sure what is happening on that front. We don't know. I don't know exactly where, the first kind of list of possibilities came from, but we did hear from a lot of experts that they were all getting the same information. It's possible that the administration changed its mind or is delaying it or choosing a different time to bring these forward. But in most things Trump related, it has already created a lot of uncertainty among philanthropies who are considering, again, removing climate from their programs or even leaving the United States, moving to Europe, which would be a pretty big deal. Obviously, for some of the biggest organizations like the Gates Foundation, that would be a massive move. So I guess kind of keep an eye out on that. I think it's kind of an unfinished story about where that's going to go at this point.
Yeah, we did actually, I think, see some reports that the Trump administration has explicitly denied that they were planning on doing this. Obviously, how much you can trust that, I don't know.
Yeah, that was explicitly about the climate focus, the sort of green-based programs. They said we have no plans to issue these executive orders. Again, who knows if that particular, denial is true, but also we don't know if these other kind of broader executive orders could come on philanthropies operating overseas or, specific. We also heard that there were specific executive orders that would target the biggest foundations, potentially Gates. So I don't think they've denied that at this point. But yeah, perhaps we can believe them that the ones on climate won't be affected for now.
Yeah, it's an interesting challenge, isn't it? Like, how would you, if you found yourself in this situation, getting the money out of the country, kind of managing this process? These are private assets, so much more difficult for the Trump administration to actually kind of target. And obviously, you could remove the tax exempt status of these organizations, but they don't really make a profit. So I'm not clear what taxes really they would actually be paying.
I think the issue there would be people who donate money to these organizations get a tax break for the donations. You remove the tax exempt status. The people who are donating money don't have the same incentives to donate the money to these organizations.
That seems like a very easy thing to get around, if I'm honest, because you can simply donate the money to an institution that doesn't focus on climate or overseas development, and then they don't donate the money on your behalf to one of these entities. Now, I mean, obviously we could, I'm not an expert on the United States tax law, so it may be more difficult than I see, but I certainly know that in the United Kingdom, people have tried that particular weave in this country to limit the tax exempt status of particular institutions. And all that happened was people gave money to charities that did qualify, and those charities donated the money onwards at their instruction. And it was kind of extremely easy to get around. And indeed, there are institutions that are set up entirely to do this. That's their sole purpose, is to provide that kind of donation.
Yeah, I think people might try to find workarounds, certainly, or I think there's some conversation about donor advised funds as another sort of vehicle for how people will give or invest this money. But fundamentally, like the U.S. there's like a really robust system of individual donors giving philanthropy and giving to charities in the U.S. And that is not entirely, especially for very small donors, not driven by the tax benefits. Certainly, I think if we want to get personal here, I certainly make donations to organizations. I take a standard tax deduction in the US. So I'm not itemizing those donations. I'm not really getting a benefit for them, but it's something that's like personally important, right? And so I think that's, for small donors, it probably may not have the same implications, but certainly there is a cadre of people for whom the tax incentive is a motivating factor in their giving.
Okay, I think given that we're development journalists and not tax journalists, we probably had better stop chatting about this because we're going to end up providing very poor information here. I think we'll have to go out and do some more research into exactly how this might work in order to find out all the ins and outs of this. I'm quite interested in how this might pan out. But anyway, right now we haven't seen those executive orders, but I think it is likely that philanthropies are already thinking hard about maybe let's get out of the United States. Let's just get to a place of safety. In most cases, I think with these philanthropies, there's relatively little kind of holding them in place within the US, apart from the convenience of being in the same location as their donors. As I said, that I am aware that there are certainly workarounds that would not make that an insuperable problem. Right. With that in mind, there's far more that we would like to talk about, I think, but we're going to have to wrap it up here, just down to time. To both of you, thank you very much. It's been an absolute pleasure. And to all our listeners, we hope you find this useful. And we look forward to speaking with you again next week.